Quote of the day: "Not everything that can be counted counts, and not everything that counts can be counted." Albert Einstein. Good day everyone, and welcome to today's special segment on investing in AI, artificial intelligence. AI is undoubtedly one of the most disruptive and important technologies of our era, shaping our world today like never before. It's rapidly changing the way we live, work, and even invest. As an investor, understanding AI's developments and their potential impact on companies and industries is not just important, it's crucial. Imagine a world where machines can process vast amounts of data, learn from it, and make decisions faster and more accurately than any human. This is the promise of AI, and it's already happening. From healthcare and finance to manufacturing and transportation, AI is transforming every sector of the global economy. So, what does this mean for investors? Well, it opens up a world of opportunities. Companies that embrace AI technology are gaining a competitive edge, driving innovation, and capturing market share. Whether you're a seasoned investor or just starting out, understanding AI is not only a smart move, it's an essential one. The AI sector has been experiencing exponential growth in recent years, and the trend is expected to continue. Investment in AI startups, research, and development is on the rise, and it's not limited to tech giants. Businesses across various industries are incorporating AI into their strategies to stay ahead of the curve. As an investor, it's crucial to understand the developments in AI and how they will impact companies and industries going forward. In this video, we'll first examine why AI represents an exciting investment opportunity. Then, we'll explore how companies like Texas Instruments and SMCI are positioned to potentially benefit from the rise of AI over the next decade. The AI investment opportunity. There are several key reasons why AI represents a compelling area for investment. Rapidly declining costs to train AI models. Over the past 5 years, the cost to train advanced AI models like ChatGPT has fallen about 70% per year. This makes AI more accessible and drives innovation. Massive inference market. While training costs are falling, servicing AI models is still very expensive due to computing requirements. This represents a huge revenue opportunity in areas like cloud computing, semiconductors, and edge computing. Critical role of data. AI models require vast amounts of quality data to learn and improve. Companies with proprietary data have an advantage. The data economy will continue growing. Infrastructure spending. Software needs hardware to run on. Demand for cloud data centers, servers, and networking is rising to support AI workloads. Early innings. Despite the excitement over ChatGPT, we're still in the very early days of AI capabilities and real-world adoption. Substantial growth lies ahead. In summary, AI innovation is accelerating while costs are declining rapidly. This creates investment potential across software, data, infrastructure, semiconductors, and more. But now let's discover the first company we strongly believe in. Texas Instruments, ticker TXN, a key AI infrastructure play. Texas Instruments is one of the world's largest semiconductor companies. It's not an AI pure play, but TXN produces many of the analog and embedded chips that help power data centers, 5G networks, and edge computing. As AI workloads grow exponentially in the coming years, demand for TXN semiconductors and overall computer infrastructure is likely to rise substantially. Here are some key factors that make TXN compelling. Impressive growth and margins. Over the past decade, TXN has increased revenue by over 60% while expanding operating margins by 29%. This highlights efficient operations. Leader in analog chips. 77% of TXN's sales come from higher-margin analog chips used in power management and signal processing. Well-positioned as analog semiconductor demand rises. Vertical integration. TXN handles design and manufacturing in-house for better quality control and customization. This is a key advantage. Strong dividend growth. Investing in Texas Instruments offers a 3.3% dividend yield and 10-year dividend CAGR of 17.6% with a relatively safe 58% payout ratio. The company appears undervalued now. EPS growth returning. After a transitory dip this year, analysts expect TXN's earnings to grow 12% annually from 2024 to 2027 as new AI computing cycles begin. Financial facts about the company. According to StockRover, the company has a great margin of safety score of 34%, which is really good. It has a value score of 73 and a PE ratio of 19. As a leader in analog integrated circuits, Texas Instruments stands to benefit from rising chip demand driven by AI workloads and infrastructure build-out. With its impressive dividend growth, reasonable valuation, and bright earnings outlook, TXN represents an attractive option for investors seeking AI leverage along with stability. Building on our previous discussion about artificial intelligence trends and semiconductor companies like Texas Instruments, I'd like to highlight another intriguing company called Supermicrocomputer, known as SMCI. SMCI is a leading provider of high-performance server systems and solutions tailored for AI workloads. The company has a strong partnership with NVIDIA, providing optimized servers to deploy NVIDIA's GPUs at scale for AI computing. The company was incorporated in 1993 and has its headquarters in San Jose, California. Over the past few years, SMCI has experienced tremendous growth on the back of surging demand for AI infrastructure. In the past 5 years, SMCI's stock price has skyrocketed over 2,000%, which is simply impressive, handily beating the returns of NVIDIA and the broader market. Diving into the financials, SMCI has seen hypergrowth in terms of sales and profits. In just the last 2.5 years, revenues have more than doubled from around $3 billion to over $6.6 billion. Meanwhile, net income has jumped over 450% in the same time frame. This rapid growth has been primarily driven by expanding partnerships with enterprise and data center customers needing high-performance AI computing power. SMCI is meeting this demand through its differentiated server architectures optimized for GPUs and other accelerators. Looking ahead, management remains very bullish, citing tailwinds from generative AI models and a growing appetite for AI infrastructure spending. As a leading US-based provider, SMCI believes it is in a prime position to capture share. Despite the tremendous growth, SMCI's valuation appears reasonable at current levels based on PE and other metrics. This leaves room for potential multiple expansions. In summary, as AI adoption accelerates globally, SMCI is poised to continue benefiting as a top provider of optimized high-performance servers. With substantial competitive advantages in execution, reasonable valuation, and massive TAM, SMCI represents an attractive AI infrastructure play. For investors seeking leverage to surging AI workloads, SMCI deserves strong consideration. Like most analysts, we rate the stock a buy at current levels for growth and value-focused investors alike. Financial facts about the company. According to StockRover, the company has a margin of safety score of -23%, but some analysts consider it still undervalued. The firm has a value score of 80 and a P/E ratio of 24. Conclusion. The AI revolution is here, and it will transform industries over the next decade. While risks exist, the long-term opportunities appear vast. Investing in AI is not just about chasing trends, it's about recognizing the profound impact AI is having and will continue to have on our world. By staying informed, adopting a strategic approach, and diversifying your investments, you can position yourself to benefit from this incredible wave of technological advancement. However, we must inform you that this video is for educational purposes only, not financial advice. Please do your own due diligence before embarking on any investment. This concludes our analysis for today. Thank you for watching. Please subscribe for more content analyzing major technology trends and related investment ideas. Until next time, happy investing.